I want us to look at a question in 2016 for illustration purposes. 2016 November. So you say November 2016, question number 1B. This kind of question has not been set severally, so there is a likelihood that examiner can decide to test it. Normally, when examiners are setting questions, they look at things that have not been done many times. So they normally go for things that are unique. Like now in this area, it is not easy to get questions where it has been set. I think for the last almost 10 years, 9 years or 8 years, they have only set it either once or twice. So for that matter, we shall now look at this particular question for illustration purposes. But once you have grabbed the concept, I'm sure you'll be able to understand and do it. Now, when you're using simulation, simulation must predict a formula. It must intend to a certain goal. It must take you to a certain goal. So you need to ask yourself, what is your objective? If your objective is to get the cost, then you need to know what are the variables that will give you the cost. If your objective was to get the NPV, then you need to have in your mind what do I require to get NPV? So in simulation, it has to be having an objective that you want to achieve. So the objective, the examiner will tell you, give me the NPV, give me the cost or the price. Then you look at the items that you've been given with their probabilities and their runs or random numbers. How can you work with them to get the objective? Let's look at an exact example here. We want to look at probability. We want to look at NPV. Now, when you're looking at the NPV, I say that NPV is equal to the cash flow times PV or PVFA. This one is the discounting factor, depending on whether it is regular or irregular. After understanding that, you now have to minus the IO, which is the initial outlay. That is how you get your NPV. So whenever you are asked to get NPV, you need to know, how do I get my cash flows, the free cash flows? Meaning that for you to make it a free cash flow, you need to remove any constraint that could be attached to it. That means that if you were to have normal running cost and then the revenue, you need to net them off so that you can have a profit that is not attached on any running cost or any expenses. Now from there, that profit, before you remove the cost of investment, that profit is what we call NPV. Without cost of investment, the NPV here, the present value here is almost the same as the profit, because for you to get the cash flow, you simply take revenue minus cost, running cost. So if the examiner is silent, the examiner has not given you the revenue, has not given you the cost, then you shall use the revenue. Like the example that we did yesterday, we were told revenues for year 1, year 2, and year 3. They didn't bring the element of running cost. Running cost, I mean, the expenses that you incur monthly. You can be generating income, but on that income, there are operating costs. Those costs need to be subtracted so that you remain with the net revenue. It is that net revenue that you should multiply with the discounting factor to get your present value. And that is why it is a PV, and if you minus this, you now get NPV. So always ask yourself, whenever you're asked about NPV, ask yourself, how do I get my free cash flow? How do I get my free cash flow or the net profit after deducting any cost? That is the free cash flow, so that you get its present value, and then after that, you now remove the initial cost. That initial cost is the same as the initial outlay. It is the original cost of starting the business, the cost of investment, not running cost. The amount of money you pump in to start the business, that is what we call IO. It is called initial outlay. In some cases, the examiner will give you, and we shall be able to see as we proceed, the examiner will give you IO, but they will call it the cost of investment or initial investment or the value of investment, or they can call it the cost of machine or the value of machine. They can tell you that somebody decided to buy a machine to make some revenues. Maybe that machine is going to prepare some products that can be sold. Now, that machine, the cost of that machine is the IO. Sawa. Okay. Now, let's read the question. I've managed to share it here so that we can all see it. And I love it when everybody is seeing it. The question says it is 2016 question number B, 1B. SKB, listen very carefully so that we can know where are the costs, where are the revenues, where are the initial investment. Those are the things that we shall be looking for when we are talking about NPV. Sawa. SKB Limited is considering a proposal to manufacture a new drug. Now, from here, you know that when you are manufacturing a new drug, that drug should give you revenue. And then the cost of manufacturing it or buying the machine to manufacture it, the cost of buying that machine is an IO. Kwa hivyo, ukisoma question, the first thing should give you some hint that this person is going to manufacture a drug. We know that that drug will generate some income. We also know that the machine that will manufacture that drug, that machine must be costing some money. Therefore, they should give you the initial cost of the machine and also the revenue that the drug will give. If it is an NPV question, the drug will be named or will be called Millennium. The drug will be manufactured using a machine which will cost 13 million. So the examiner has given you the cost of machine, and that is the initial cost. That is the initial cost of investment. Now, the cash flows and drug life relating to Millennium have been estimated as stochastic exogenous variables with the following distributions. That English should not confuse you. The most important thing is that they're going to give you the cash flow from the drug. And because they are not telling us it is revenue and cost, we are assuming that it is a net cash flow or a free cash flow. They have taken revenue and they deducted the cost. So what we have is just a free cash flow, unless now you are told about depreciation and tax, which we shall be able to see how you can be able to handle that. Another thing, they are telling you the drug life. That means that that is the duration that the drug can take before it expires. So that means that that drug, once it is manufactured, it will stay for that period while still generating for you revenue. The drug can last that long as it generates revenue. We are told that annual after-tax cash flows, that is after tax. So therefore, we have cash flows that are net. Tax has been deducted. The annual cash flow, the annual after-tax cash flow, that is a net cash flow without obligation. For you to get after-tax revenue or cash flow, that means that even before you taxed it, already you are deducted some cost, and then you ended up taxing it. So that means that this cash flow is free. It does not have any constraint or anything attached to it. It is not restricted to anything. Iko free, unaweza tumia. Kwa sababu kwanza, you removed the expenses. After removing the expenses, the balance you taxed. So it is like the net profit. Annual after-tax cash flow is the same as net profit, a free cash flow. The probabilities have been given. And so you are told that yearly 1,000 cash flow, the probability of having 1,000 cash flow is 0.02. That is a probability. And that drug will stay for 5 years. The drug will stay for 5 years. And then we have probability of the period. So we have probabilities for you having the cash flow and the probabilities for the drug living for a longer period. Now, the first thing that I want to remind you about is that we have two things here. We have the first one here with its probability, and then we have the second one with its probability. So it means that you need to have two different random number ranges. The random numbers are determined by the probability. That is what we agreed on, right? Ukiona tu probability hivi attached to something, just know that you're going to get random number range for this one and also for this one separately. Is that not a good idea? That is the first thing or the first step that you have to consider. Whenever you see probability, just know that that probability will help you to get the random number. And even when you move down, you will see them talking about random number. So you just know that this one should have a random number separate from this. But this random number, if you are to make it, what will it help you select or pick? It will help you to pick the drag life. This one will help you to pick the net cash flow. So it means that when you want cash flow, you come and pick from here using the probability range here. So that means that we're going to make two probability ranges, one for cash flow, another one for drag life. Can we start from there? Can we start from there? What? By getting the probability random number ranges for cash flow. Random number ranges for cash flow and then drag life. Are we together up to there? Are we together up to there? For simulation, you first keenly look at where the probability is. Ukiona tu probability mahali here, then just look at what it represents. Then just know that that probability must be extended so that you can get the range. And that range should be able to help you pick the item that it represents. So we have two probabilities, and then we have the cash flow. Another one represents cash flow, another one represents the drag line. Each has got its own item that it will help you to pick. So up to there, is it something that you understand? Yes, we are together, Waziri. I thank you so much. And I hope that everybody should be responding, or everybody will be responding to make my work easy. To make my work easy, that we are together. In my class, people normally talk. It is the only way we can be able to understand each other. And remember, if you keep on communicating, it will be easier for me to know that we are together ama kuna shida mahali. Whenever somebody is listening or is silent, I know that there is a problem. Kama wewe unaongeanga, alafu kuna time naona umenyamaza, I'll definitely know that there is a problem. Do we need to accumulate? Exactly. So whenever you see probability, and then you are being given random cash flows, just know that this one is what? Simulation. Sasa, ukipewa random numbers, na umeona probability, your question, already you know it is coming from topic number 1, which is advanced capital budgeting, and that question is simulation. The next thing, expand. Even if you don't know what you're looking for, take that probability, expand it. That is marks. That is a mark. That is a mark. Sasa, so hiyo ndio secret. Whenever you see it, we anza kufanya. Hata kama ujui unaenda wapi, unajua kazi ya hiyo probability, fanya hiyo kazi yake. Sawa sawa. That is the first step. So let's expand for them so that we know what else can we use. So we start by expanding, and because we have two of them, so you say that we call it for random number ranges, expand it and call it random number ranges. So we have, where do we start from? We have the first one, which is the cash flow. Cash flow. Hata kama ujui, one thing that I know you can do is to expand it. Just expand, that will give you a mark. So when we have cash flow, the next thing is the probability. And then the next thing is accumulation of that probability. So you call it cumulative probability. You accumulate it. Then we call it, the next one, random number ranges. Random number. That's something that I'm sure you can do. You can do without being reminded in exam room. So we start with that. This one we are doing. This one we are doing for this one, and then we do for another one also for drag life. Okay, so let's start. What are we given? You want us to type, you can talk, but don't make noise. You don't make noise, please. When you want to talk, make sure that your background is silent. I don't like noise in my class. Mimi nishaona walimu wengine hata watu wanapiga kelele, they don't care. Mimi nikiona wanapiga kelele, I'll mute you. You will not be able to talk again. So I'm giving you an authority to talk, but make sure that the background is okay. So let's proceed. So we have our 1,000, 1,500, 2,000, 2,500, 3,000, like that, add 4,000. That is easier. We can do that. So we start with 1,000. Then we have 1,500. Then we have 2,000. Then we have 2,500. Then we have 3,000. We have 3,500. We have 4,000. That was quite easy, right? When needed, we'll request. Okay, fine. So let's have that. Then now you pick again this. Just pick the one that represent 0, 2, 0, 3, 1, 5. So we have 0 0.02, 0 0.03, 0 0.15, 0 0.15 again, 0 0.30, 0 0.20, 0.15. They should add up to 1. Probability must always add up to 1. I repeat, it has to add up to 1. Ukiona ifiki hapo, just know that examiner is wrong. Sasa, so just add. This plus this is 0.5. Sindio? 0.5 plus this 0.2. No, 0.05 plus this 0.2 plus this 0.27. No, 0.2 plus this one's 0.35. 0.35 plus 0.3, that is 0.65. 0.65 plus 2 plus 0.2, that is 0.85 plus 1.5, 0. It comes to 1. So the summation should be 1. Now you have confirmed that it's okay. It is okay. The next thing is now to accumulate. So when you're accumulating, we have 0.02. That's the first one. Then you add this to this. So you have 0.05. Then you have this to this. 0.20. Then we have this to this. 0.35. Then we have this to this. You add it, then we have 0.65. You add this to this, we have 0.85. You add this to this, 1.0 now. I still feel bad that we are so many in class and some people have started missing class from day 1. That is what makes me unhappy. Very unhappy. Day 1. Let me see how many we are. Keep on copying that, then start expanding. Start expanding. I see how many have decided to escape from day 1. Then they will come and tell me, Mwalimu, I don't understand simulation. I don't know. How do I go about it? Day 1. FM tuko ngapi? FM. I don't understand simulation, Mwalimu. So you're supposed to be 9. You're supposed to be 9 and we're only 5. So 4 people have decided to not to come in. I know they will join. They will join later. You expand. You expand. We agree that how do you expand? What are you supposed to consider? What are you supposed to consider? You can talk. Waziri?
Yes.
What are we considering when you are expanding or creating random number ranges? What are you supposed to look at?
The probability, the decimal places.
Decimal places. So Jen, I know you are joining today. Jen, what we do, you come here and look at the decimal places of probability. If it is 1, then you need to know that you are having 1 digits here. If there are 2, you need to have your 2 digits there. So for example, this one, there are 2. If it was 1, you will start, let's say that it was 0.2, then we have 0.5, then this one is only 1 digit, decimal place. So here you say 0 to 1 less than this, so we have 1. Then 2, 2, 4. This one should have been 1 digit. But now there are 2 decimal places. We must have 2 digits here. So how do we expand it? Ruth, tell me. I'm not seeing Judith here today. Judith is not here. Okay, Ruth, tell me, what do we do? The first one, tell me the first range. Give me the first range, please. Ruth, tell me the first range. Joel was not there yesterday. I don't think that he was around. Simon was not around. We say that you take 1 minus that number. 1 minus that number. Your number ni gani? The upper limit on the first one is 2, not 20. It is 2. Kama ni 20, unatoa 1 inabaki 19. This one is 2. Tunakubaliana? Tunakubaliana, Ruth? By AFM ni moja. If you miss something kidogo, utamaliza hiyo hesabu ukijua umepita. Kumbe ulimess up from the start kidogo tu. Alafu nasema mwalimu, ile paper I was very sure. Lakini ukiangalia vizuri unaona makosa ilikuwa kadogo. Yes. So this one it is 2, not 20. Kama ingekuwa na 0 hapa mbele, then it is 20. Sawa sawa. So you start with the 2 decimal places. So we have 0, 0, 2, 9, 0, 1. Ahead. You're not sure about that. Now you are sure. That is how it should be. Sawa sawa. Yes. These are 2 decimal places. So forget about the decimal now. It is just 2. Evo. Forget about the decimal. Equal Evo. So that number that you see here, minus 1. Toa 1, 2. Then you have it like that. Waziri, nipe the second one. What should be the second one? What should be the second one? Ama amelog in. Oh, Waziri amelog in. Amelog out. She's not in. Jim, now you know the trend. Waziri is here. Give me that second one. Thank you so much, Judith. Ruth has given me the second one. You start with the one that uliacha hapa ndio inakuja. The upper limit here, now it becomes the lower limit here. So it is 0.2 to 0.4 or 0.4. Then here we have 0.5 to 19. Then we can now proceed. Joel, we can now proceed. Give me the last, this one. How will it be? Na kama kuna mahali uelewi unasema mwalimu bado sijashika hapa.
20 to 34.
Thank you so much. So we have 20. Sema ingine tena ndio nijue umeiva sasa. The next one?
35 to 64.
Exactly. Just be courageous and be confident. You are right. 35 to 64. Ahead. I want somebody else. I want Simon or Joel to tell me. Joel or Simon? Next one here.
Joel,
Okay. Go ahead.
65 to 84.
65.
65 to 84.
Then the last one.
And the last one is 85 to 99.
Thank you so much. 55 to 99. Yes. Jen, the last one, never put 100 here.
Am I right?
One less than. So don't put 100. Though it should be 100, but just have it one less. So it is 99. It always ends with 99. Yeah. So we have done the first one. Imagine that is a mark. Even if you are now not able to move to the other areas, you can get some marks there. I hope that everybody has done that. We can now wrap. You have it in your books. Let's now have the next one. So because we have probability for the next one, we have also to expand it. We have the probability for the other item, the drag line. Drag line. Siri ni ku-expand. Answer baadaye. Answer ni baadaye. Sahi ni ku-expand too and get some free marks. So drag line, we are given 3. We have them here. We have them here. 3, 4, 5, 6, 7, 8, 9, 10. That's quite easy. So 3, 4, 5, 6, 7, 8, 9, 10. Okay. Then we have our probabilities. Should also add up to 1. That's the secret. 0, 5, 10, 30, 25. 0.05, 0.1, 10, 0.20, 30, 25. Is it 30, 25? I always forget very fast. What did I see? 30 is 30, then 25, then 15. 30. Then we have now here 25. Then this one 0.15. Then this one 0.10. Then unapata 10, 0.3, then 2. 3, then 2. So we have here 0.03, then 0.02. We add them. Always confirm if it is 10. So this one should be 0.15. Let me just say 15. 15 plus 30 is 80. 45. 45 plus 25, 70. 70 plus 25, 90. 95. That is 70 plus this and this. That is 25. So it is 95. 95 plus 5, 100. So that is okay. That's okay. Now the next thing is to accumulate. So the first one will have 0.05. Then you add now 0.15. You add 0.45. You add 0.70. You add 0.85. You add 0.95. You add 0.98. Then we have 1.00. Up to there we are fine. I believe so. Then now you have to expand. Again, you reason, look at the probabilities. Look at the probabilities. We are having the 2 decimal places. So we need to have 2 digits. So we start with the first one. I'll be calling your names as per what I'm seeing here. Admin. Somebody has logged in with the name admin. The first one, give me the first range. Admin, give me the first range. We have to participate, all of us. We have to do it together. Assist me the first range. Admin. Look can type or talk, admin. Sitoki hapa, lazima uongee. I have 1 hour to do this, so sitoki hapa. Let's all participate. Let's all agree that we shall be participating in this class. Let's all agree that we shall be participating. Admin. Thank you. Thank you so much, admin. So the first one is 0, 0. And then we have 0, 4. Yes, 1 less than that. Simon ametoroka. So we have who? Joel. Consider number 2.
Number 2 is 05 to 14.
Thank you. Jen, follow?
Yes.
Jen, then Ruth. That is how your names appear on the screen. Jen. We need to do simulation after this, so we need to finish very fast. I'll have to find a simulation.
15 to 44.
15, 44. Thank you. Volunteer yote.
45 to 69.
45 to 69. Thank you.
70 to 84.
70 to
84.
84. That's correct.
85
to 94.
85 to 94.
95 to 97.
95 to 97.
97 to 99.
90.
97.
98 to 99.
98. Sawa. 99. Don't repeat the number. Ukiona tu 7 iko hapa, haiwezi kuwa hapa definitely. So the upper limit is always the lower limit in the next line. So the upper limit is the lower limit in that line. So up to there we're okay. Now we have done 2 things. We have simulated, we have created probability random number ranges. This is what we call random number ranges. The main aim of doing this was to create the range. That is our main goal. So now we have done for the 2. So I'm repeating. In exam situation, just do it even if you don't know the next step. We are told that the minimum required rate of return from this investment is 16%. Now, rate of return is the same as the cost of investment or cost of capital. Sasa, the cost of capital. Because in this case, we call it rate of return. That is income. But when you call it cost of capital, it is an expense. So whenever you're doing business, whatever is a cost to you is an income to your friend, the person you're doing business with. So in the market, if somebody is saying that the cost of goods have gone up, the seller is saying that the cost of goods are okay. They have increased. The seller has increased. Yeah, anaona ni kama anatengeneza pesa. Wewe unaona ni kama unapoteza pesa. So what I'm saying, in the market, whatever is a cost to you is an income to somebody. So if the examiner calls it rate of return, somebody else, the examiner can also call it the cost of capital. The same with loans. The interest rate on loans are income to the bank, but they are expenses to the businessman. So when we are told that the rate of return is that is basically the cost of capital. So you can also use it as the cost of capital. So don't be surprised next time if you are told to calculate work and you're given the return on investment. Now the company has approached you as financial management expert to perform an analysis of the above project using the following random numbers. So that definitely takes you to simulation. Perform 10 simulation runs, meaning that unajaribu mara 10 of the NPV of this project. So you need to get NPV mara ya kwanza, NPV mara ya pili, until the last one. You know what we require to get NPV. Normally we require the cash flows. The second one, we require the number of years. That is where you always talk about and we normally talk about PV. If it is PV, this one is for frequent, right? If it is PV, it means that it's a one-off. So PV is for regular cash flow. So like now, yeah, this one, we are told it is one drug, but there is a probability of this, that this drug will last for 3 years. And if it is 3 years, it will be generating the revenue equally every year for the next 3 years. What if the drug is now 4 years? There is a probability that it can stay for 4 years. Every year it will be generating this. That means that whatever cash flow we shall pick, we shall consider this period to be regular for that particular time or at that particular point. So we have regular cash flows that are PV, and you always have R and year. So we have the rate and the year. So R is the rate, then the year. So we've been given the rate. The years are here. The cash flows are given. What else do we need for us to get the NPV? We are given IO, which is the investment outlay, or the initial outlay for investment. So let's look at the probability random to help us, the numbers to help us pick. They are in 444. Can we pick them in 44 or we pick in 22? Huyu ametupea zikiwa zimeshikanishwa ine. So when you are picking, do you pick them the way they are 44 or you pick in 22 or in 11? And why? I want to see somebody who is trying to listen and understand the idea behind the simulation random numbers. When you're given random numbers, what helps you to know how you're going to pick them? This semester, I'm enjoying teaching AFM because my students are very active. So I'm really enjoying. Kama hiyo sahi, I know somebody is going to talk to help me and others too because of the probability digits. Thank you. So what helps you with the probability digits? Let's assume that you picked them when they are 4. Like now, this one is, the first one is 4. 5397. Where does it fall here? Let's say we pick ikiwa hivyo, 5397. Does it fall anywhere on these ranges? That is a random number, but this is a random number range. So the random number that you are picking must fall on these ranges. That one has got 4 digits, 5397. It is not even falling here. These are the maximum is 99. Lakini hiyo ni 5397. It is not falling here. If you pick 1, let's say that you are picking them 1, 1, 1. Does it fall anywhere here? Yes, all of them will be falling between 00 to 14. Right? Because 1 will be here up to 5. And then because this one is 4. And then you start 5 to 14. 9 it will fall up. Because you are picking 1, 1, 1. Number is only 1 to 9. So if they are 1, 1, 1, the maximum you can go is 9. So 9 will fall here. The rest you'll be leaving out. If you pick them in 3, so we have 538, 539. Those are 3. 539. They are not falling here because we are talking about 500 and our maximum range is 99. So you see, before you pick reason out and ask yourself, will it help me? If you pick one random number, when the ranges are like this case, it will only, they will only be playing here. All of them will be here. So it is not going to meet the objective. True, now, we now start picking. When you want to pick, you reason. What are we doing? So we might start by calculating our, we might start by doing the random number arrange the runs. We might start by doing the runs. You know, I say that we are getting NPV for 10 runs. So the first run should give us NPV, the second run should give us NPV, and our question is, how will we be able to get our NPV? So look at what we're doing. We call it simulation worksheet. That one, we call it the worksheet. So simulation worksheet, I hope that you can see from here, so that we have a big thing up to here. You can still see, I can see. So let's have our first run. The runs unaweka huku, runs, the trials. Then after run, it is the simulation that will guide you, the random number that will guide you. So after having the run one, go and pick random number. So you start with a random number. So you have random number, which is Rn. So let's have this one like this. I wish I could be accurate, but let's just have it something like that. So you have the first run. Go and pick the random number so that that random number can tell you what is next. What do we require when you are getting your NPV? The first thing is the cash flow. So NPV is always cash flow times PV or PV. And now we know we can get discounting factor. Why? Because we've been given 16%. We can get discounting factor because already we have 15%. And what we are given again is the number of years. So we have the rate, we have the years, so we can get our PV. So that means that the first thing is to pick the random number. This random number should give you cash flow. Then we have another random number that should give us the number of years. So we call it drag life. Drag life, senior. So then we have our PV. Why? Because those drag life, the drag is going to stay for 3 years, giving you a certain cash flow for 3 years or 4 years. So PV. Now, when you have drag life with PV and you have the cash flow, you should be able now to get your NPV or the PV. We have NPV. In fact, we can just say we have PV. No, NPV. Let me just have NPV. Because we simply minus. I'm not sure if you are able to see the whole board. Okay. So, umeona vile tumaliza. Because we have two probabilities, those probabilities are giving us two random numbers. So the first random number should give you the cash flow. The second random number was for drag life. And then we can calculate our own PV. The reason why we are calculating PV here is because the periods vary. So let's come and pick the first one. The first cash flow, you pick using the random number ranges or random numbers. So come to the random number. The first random number is, can somebody tell me? Give me the random number.
We'll try. Is it 53?
Thank you. You start by picking the first one, 53. So you pick 53. The second one is? We can just read them. 53 then 97 still.
97.
So in that line. So pick the first one, 53. It will give you a certain cash flow. Then you need another random number is 97 to give you a certain drag line. You go to the second line, hivyo. Zitakuwa zinaenda hivyo. So we can fill the gap the way we did the other time. So you just read for me. So the next one is here too. Then is the second run. Random number ni?
66.
The second random
Alafu
number, no, the random number for drag life is?
99.
Thank you. Come to the third run.
30. Alafu 81.
The fourth one?
19. Alafu 09.
The next one?
31. 67.
Ngapi?
67.
The next one?
81.
81.
Alafu 70.
Thank you. The next one?
38. 75.
Good. Next one?
48. 83.
Number 9?
And then 90.
And
then 33. And then we have 58.
Just 1 minute. I think there was something here that is making noise for us. Moses was trying to work on something here, so Paul, proceed. So we are having the last one is
52 now.
52.
Yeah. It was 58 and then 52. I thought you wrote 58.
So it's having 58,
Yes, and then 52.
So you see the examiner knows that at the end of 10 runs, utakuwa umemaliza hizo zote. You know, sometimes the examiners are also aware of what you're going to do. We are done. Now we have basically arranged them in this order. So we have here, yes, this is 33. And then we have 52 here. That is what we have already. And we pick them from the random number ranges. So then you can now fill here. So go to your book and check the book, the notes that you had before. Let's come to the first one. For 53, we want cash flow. So 53, what will it give us? Look at the random number ranges. Where does under cash flow, where does 53 fall? It falls between the notes that you're having. Where does it fall?
35 to 64.
$35 to 64 up.
35.
So the cash flow will be 3,000. 35 to
3,000.
64. Yes.
So that is cash flow is 3,000. So you put 3,000 because this one falls between 35 to 64. The second one, the second cash flow?
It's 3,500.
Good, 3,500. The next one?
The next one, it is 2,500.
Are we all together or somebody amepotea? Let's take a break. First, I ask. Welcome, Dennis. This one is advanced level financial management. Sasa, advanced financial management. We are in topic number 1, subtopic number 1, but lesson 2. That is the probability, the simulation. Now, I'm asking, are we all together here? Apart from Dennis, who has just joined, are the rest following? Are they aware of what we're doing? Simon, nimeona kuna shida ya network. Are you okay? Ruth,
Okay.
are we together?
Yes, yes, sir.
Good. Admin? Yes, we are. Jen? I always tell people that the most important thing is the concept, because the examiner will set it in a different way. But did you understand what we're looking for us to get the NPV? So sometimes they can bring exact question like what you've done or a different one. Jen, are we together?
Yes.
We are together. Yes, one. So that's fine if you are together. Let's proceed now. 19. Where does it fall?
The cash flow for 19 is 2,000.
Uh-huh.
And then the next one is 2,000. Mandika 200.
Uh-huh.
Yeah, the next one is 2,500.
Thank you. Uh-huh.
Alafu the next is 3,500. Mwingine aseme mwalimu ndo tujue tuko pamoja, si ndio?
Come again.
Mwingine aseme ndo tujue tuko pamoja.
Oh, yeah. Aya, somebody to pick
3,000.
from there. Jen, pick from there.
Kuna mtu alikuwa anasema
I want Jen to pick from there. Jen or Ruth. Kila mtu asema moja moja.
3,000.
3,000.
Say 38. We are on 38. 38 is
3,000.
the next one.
3,000.
2,000.
3,000
Three.
again.
Is it 3 or 2?
3,000.
Okay. 90.
4,000.
1,000.
Uh-huh.
3,000.
Okay, so let's move to the next one. So I think we are done with that. The drag life. What are you getting?
9.
The first one is
9.
9. So that means that this drag will last for 9 years. So if we were to do the first one, we shall consider our cash flow to be 3,000 for the next 9 years. Every year, 3,000, because these are annual cash flow, and the drag will last for 9 years, giving us this cash flow for 9 years. So now that you have the years and you have the cash flow, let's say that you're getting now NPV, or there, or you can see there. So now, in case you're getting NPV, you can say it's now the cash flow, which is 3,000 times PV per, because it is the same for 9 years. So PV per 16%, 9 years. Are you seeing? So you get all this times this minus now the IO. Is it easy now? Minus the IO. So that is what you're going to do, so that we can get NPV for the first year, then the second year, like that. So let's get the next one, 99.
It's 9.
10.
Yeah, is it 10 or 9?
10.
Okay. Next one.
8.
Proceed.
5.
5. Are you guys sure? 81. Where does it fall?
7.
Na msinyamaze, because ukinyamaza itakusumbua wakati wa revision. You need to check when somebody says, you also confirm, so that you get the correct thing. To help you during revision. So is it 7 or 9? Or 8?
7.
Somebody confirm for me. 80, 81, where does it fall?
7.
7, thank you.
4.
Then 9?
4.
9?
4.
Okay. This thing is very important. Remember, you're going to get your PV, and the period here should be 9 years. So here 10 years. So imagine if you get it wrong, you'll get wrong NPV. How many marks are you going to lose? Just getting NPV here. Sio mchezo, you're going to lose how many marks were you given? 12 marks. Kimchezo tu hivi. 12 marks. We can't afford because of accuracy here. We can't afford, imagine. Imagine we can't afford. We want to pass. So is it 4 or 5? Jane, is it 4 or 5?
It's 4.
4, thank you. So that is this one, 4. And the next one, 67. Joel?
6.
Be sure it is the correct one. Joel, take over.
7. 17 is 7.
It's 6. 6.
Why are you saying 6? It's 7.
6.
Why
It should be
6?
7 or 6.
Should be 7.
70. 70 should be
7.
It's 7.
the
7.
next one. 86.
It's also
No,
7.
7875.
It's still 7.
83.
Still 7. 33 is 5.
33 is 5.
5. Yes.
Yeah, Dennis, this is 2016 question number 1B. 2016 question number 1B. Yeah, this one. Advanced FM. Question 1B. If you join us, we shall give you the video for the last class so that you can pick up, and also this one so that you can know what we're doing. After class, kindly contact me or our admin through this number, or that is a 00. So it is 20 525 000 or 0726 83 98 08. We shall be able to give you. We have an offer per unit 4,000. That is a offer rate per unit, but the normal rate is 45. This rate starts today. The offer starts today. It is ending soon on 15. The normal rate is 45. So, changamka tuendelee pamoja. So the last one you said is 5, and then second last is 5, then
6.
6. Thank you. So these are, we agreed, these are independent runs. They are independent runs. So these are first trial, you go with it, the second trial, the third, the fourth eval. Now the first one should give you NPV, and we have the cash flow, we have the number of period that we have found that the project or the drug will live or will last. So you can be able to get your PV. Can we now get PV here? And we shall just take the PV times the cash flow. PV as the cash flow. But for us to get the PV at 16%, the cash flows are different, the periods are different. So we need to get 16% for 9 years, for 10 years, like that, all of them. So this drag life will help us to get the PV. Can somebody get the formula we agreed is for PV? 1 minus, in bracket R, 1 plus R into N minus N all over R. That is the formula. That is the formula. So give me the first one. First run, what is the PV per second? Just like yesterday, we shall do this together. So Jane, get the first one. Admin, get the second one. Waziri, the third one. Ruth, fourth. Joel, fifth. Or we start, Jen get the first one. Admin, the second one. Joel, get the third one. Joel, the third one. Ruth, fourth one. Waziri, fifth one. I'll do the rest. I'll start from sixth. So sixth going down.
Then kindly mute, huh?
Okay, sorry for that. I can assist. Okay, let's proceed. Kuna mtu nimemfanyia. That is Waziri. I've done up to here. That is 4 point because they are the same. So get me the figures here. Fourth one is 2.7986. 7982. That's the fourth one. 79. Is it the fourth one? No, that is 4. Oh, hata Waziri sijamsaidia, so it is here 2.7982. Aya, give me the figures. I'm done with mine. You have a question, yes. How are these regular cash flows? How are these regular cash flows? You see now, the random number helps us to get the number of years. So we have gotten year. So in the first attempt, when you use simulation, the outcome is that with the random numbers, we are able to get the cash flow and the number of years. So if you're given the drag line is the number of years. We are assuming that the first trial shows that this drag can stay for 9 years. And every year there is an annual cash flow of 3,000. So if you're given the number of years and you're given the cash flow, can you get probability? Yes, you can get probability. Can you get NPV? Yes, we can get NPV using PV fund because the cash flows are annually, the number of years are 9 years. The first trial shows that the drag can stay for 10 years, like that. So you can get all of them with those possibilities. They are regular cash flows. So you can proceed. So have we given them? Have we given the answers? Let's share second run. Oh, okay. The second one is 83.32. 4.8332. The first one is 6065. Okay, so 4.6065. And then we have 386. This 4.0386. Waziri, hujatuma yako. You are supposed to get me number, this one. Umetuma mbili, or did I miss something? The fifth one. Has somebody done the fifth one? 68, 49. 68, 49, 47. Now NPV. So basically this drag life was to help us get the PV because it shows that it's an annual every year. This one, every year 9 months, 9 years, and every year is 3,000. So we have gotten, it has assisted us to get our PV. Now we can get our NPV by calculating PV times 3,000, which is the cash flow. So it is this times this times this, we get our PV minus IO. IO was 13 million. So let's start with the first one. You're giving me the first one to be 819. $819.5. That is if we go with the first one. So we are having 819.5 minus 13 times 819. 819.5. 819.5. That is what you're supposed to get. So do the rest like that. Then we have all the NPV down there. We get the average NPV. What was the question? Need to look at the question. They wanted NPV for each run. Using the perform test simulation of the net present value of this project. So they have not told us to get the NPV for each run. It's the NPV for each project. NPV for each project. So proceed, because I've seen the figures here are in millions. So we're okay. These are in millions. It is 1 million, million. So even the answer that we are getting there, they are in millions. So can we try? This one should be 13. Let's say, for example, this one should be 13,819,500. That is 13,918,000, then minus 13 million. So the figures are okay. That should be 13.9. This one is 13.919, 13.819,500 minus 13 million. So you can get the differences. So the cash flows are in millions. So it means that even the NPV, that the present value that we're getting is in millions. So it is 13,819,500 minus 13. So if you get the first run, you're going to get that. Then the second one, also the same. You minus 13 million. So let's get the second one. The second one is 4.8. Minus, now times 4.8 times 3,500. But remember, these are millions. Those 35 are millions. we have been told here. They are in millions. We have been told here that they are in millions. No. So it is 35 million. The figures are in millions. So it is 3,500,000. 3,500,000. So this one times 3,500,000. So you're getting 16. The answer is there is 16,916,200 minus. So we have here 16,916,200 minus 13 million. What do you get? You're getting 3,916,200. So that is how the figures should be. So to make it easier, just have just now write the final answers that you're getting. So here we have 3,916,200. Now let's get them going down. Let's get them down, going down. The other one you're getting 2.2 million. Can you have them in millions? So, or you want to have them in thousands? Still the same. You can be rounding off. If you round off, this should be 3,916. Then we know that we are going to have them here in terms of thousands. So when unaamua unataka kuzifanya aje? I prefer in thousands, in millions, so that we don't have confusion. Naona mnaenda mbio mbio. Ni kama mmeshika rada. So the second one, the third one is 2900. That is 2 million. 906, 903. So this one is negative 2,903,500. They are in millions. And then the third one, the fourth one. Waziri, you have not shown what it is. Oh, this is the fourth one. 743,600. Negative 7,043,403,600. I hope that is clear. That is what they should be. This other one is for. You prefer them to be in thousands. So if you prefer that they should be in thousands, then hata hii inafaa ikuwe 800. This one is 819,500. Depends on what you understand, but I hope that you're understanding the logic. We have 3.782500. That is number 5. So number 5 is positive, or negative. 3.78.25. Negative 8842. That is number 6 is 1135. 100. Negative. Are they all negatives? Mnafanya nini? Are they all negatives? Number 7. No. Si unaweka equal. Means sasa naona zote ni negative because umeweka in bracket. Number 6 is positive. So number 6 should be positive. 1, 2, 3, 4, 5, 6. 1, 1, 3, 5, 100. Number 7 and number 8, negative. 88, 84. So we have 8, 84, 200. Is also 8, 84, 200. Number 9 is 97. 97 positive, 97, 200. Is it 96 or 97? Can you get me the correct figure? The last one. Number 10 is, what is the value of number 7? Number 9, what is the correct one? Number 10 is 1945, 900. 1945, 900. Nasema ni negative. So that is in bracket. Now, these are NPV for each period. You just add them. After adding, you're going to get the total NPV. You divide by 10. That is average. You divide by 10 the way we did the other one. It is 96. 96.8. So you're saying that this one should be 96,800. Now, one thing that you need to understand, because now you're getting the full figure, under NPV, if you decided to have them in thousands, show here. Show that they are in thousands. Show that they are in thousands. Here. Or if you leave them the way they are, then that means that you are given the full figures. So even these ones, I should give full figures. Because now I'm having them as full. So that my answers can be correct. You can either work with the thousands, just say here, thousands. Alafu you just leave them the way they are. So that one, if you multiply this and this, you get your answer there. You're going to get 3 million times 4.6065. 4.6065 times 3 million. You're going to have 13,500. So there you have 13,819,500 minus 13 million. You're going to have that. Then you're going to have that. So they are fully in full numbers. So if you add the total here, what do you get? Total down there, what do you get? You're getting 38,9,500 plus What should be 2? So 30 and 250 minus 7. Right. What are you getting? What are you guys getting? Negative? Down there mnapata ngapi? I'm getting negative 8, 4, 2, 0, 50. Negative 8, 4, 2, 0, 50. 11, 8, 41. Can somebody also try? I'm getting 11, 8, 42, 0, 50. Any other person? Waziri anapata 10, 952, 100. It's about accuracy. What are we getting? Sisi wote tunapata hilo. Aya, whatever answer that you're getting down there, you're very fine. The difference comes from 9 because you used PV 3.2742. What should it be? 43. And that is a small thing. Can it really cause that? Okay, 3. So are you getting the same figure as mine? So you say that with the 10 runs, the average NPV is 11, 11, 842. 11, 842. 050. Divide by 10. So that should give you an average of 1,184,82,84, 205. That is negative NPV. So do not accept. The average NPV is negative, do not accept. That is how you conclude. So, thank you so much. Now, in our next class, we shall now look at sensitivity analysis. In our next class, we shall look at sensitivity analysis. I'm just trying to check if we have another question of the same type, even in the previous years, just in case we have another one. If we have another one, we shall do during revision. Have a good night.